We are live from Las Vegas. I'm Diego Sanchez, president of HousingWire, and I have a special guest this evening. It's Michael Tannenbaum. You're the CEO of Figure.
That's right.
It's great to talk to you today.
Yeah, glad to be here. Thank you.
So, Figure recently went public. Congratulations.
Thank you.
It's amazing. How are you staying close to your partners and to the business as you go through all this change and evolution as a company?
It's a great question. I think that's something that we as a company are really focused on, and I'm focused on as well. In particular, we do a QBR process that I get very involved in, where we do business reviews with all our partners. We are constantly joining calls, sales calls, both myself, the product team, the operations team, to make sure we hear that feedback. We review customer complaints and feedback, customer reviews all the time. They're piped in through our Slack channels. And we also even do some of our management offsites in partner offices, so I can make sure that our whole team gets the feedback from our customers. So we're pretty partner oriented. It's a big part of our DNA, and I really emphasize a lot of these routines and rituals to make sure we're still staying close.
And so how do you partner specifically with mortgage lenders and the mortgage industry, and how do you help them?
Yeah, it's a great question. So we have over 200 partners. In fact, almost 80% of what we do is B2B. So partnering with independent mortgage banks, credit unions, traditional banks, fintechs, home improvement companies, and essentially through either an API or just a web app, they can offer this great Figure mortgage product to their customers with very limited technology integration, and they also get access to our whole capital market. And so we are offering both an embedded origination system and capital market, which I think has made our product so helpful and important for so many of those 200 partners.
Amazing. And what has been the focus of those mortgage products? Is it mostly home equity, or where are you honing in on?
Yeah, we started in home equity, and that's what we're known for in many ways. But I think over the past year or so, we've actually been doing a lot more first lien mortgage. We do that still with a home equity line of credit, fully drawn at closed. But it actually does the same thing as any first lien mortgage, but also offers the borrower an ability to redraw. So in many ways, it's a superior product. We launched some non-QM style products, so bank statement non-QM, as well as a DSCR product. So we have a much more robust suite than maybe a year ago, where we were solely HELOC. Now we have, a first lien competitor that people use, and the pricing's really comparable to what you'd get in the agency space, and then those non-QM products.
So you're growing quickly, you just went public. How are you evolving your team, especially your leadership team, in this time of tremendous change for your organization?
Yeah, I think that what's nice is when I came to Figure, I had the mandate to take the company public. So a lot of the folks that we brought in, like Macrina, our CFO, and Ron, our chief legal officer, they had that public company experience, and that was important to hiring them. But at the same time, Figure was successful before I got to the company, so I wanted to keep as much of the existing team as I could and kind of double down on what was working and fix what we needed to do, or sort of improve what we needed to do to allow us to go public. And so I've kind of kept some of the folks that helped make the company great and have been around the company for a long time, while also bolstering with folks that we've needed to bring in to get us to the public company readiness phase.
So I think Figure's pretty well known for being an innovator, bringing disruptive technology to market, but you're also operating in a relatively regulated industry in mortgage lending. How do you balance innovation with compliance and regulation?
I think it starts with personnel. So our chief legal officer that I mentioned previously, Ron Chalemi, he not only has a background in fintech and mortgage, but also he was himself a regulator. So he has that balance, which I think is really valuable. And it speaks to more broadly, not just personnel, but a mentality that I've had since I've been in the fintech space over the last 15 years. And what I've been focusing on is the combination of regulatory, finance, and technology. And it's that first piece, that regulatory that I mentioned in the context of this, that's so critical. And you can't just do finance and tech without regulatory, because you of course won't be following the rules. You can't do, you need all three of those stools to bring that disruption. And I think if you can understand how those three things work together, finance, regulatory, and technology, you can really push product experiences and product paradigm in a way that you probably couldn't without that. And that's been something that I've focused on for my whole career.
Artificial intelligence, big buzzword now in mortgage. What is the now, next, later for Figure in terms of artificial intelligence, specifically for lenders?
So from a lender perspective, lenders are relying on Figure for great technology, great experience, marketing, all the product and capital markets that we provide. And we started kind of the now of AI has been around lowering costs and improving the process. So for example, we do a mortgage in $1,000 versus industry average of 12, which is of course big.
Huge.
And a huge part of that's due to AI. So as an example, we have this stare and compare killer that eliminates the process through which someone involved in a mortgage would be comparing across multiple documents, making sure an attribute was the same. And so we've been able to cut a lot of the time and cost out of a process. And that's been great. I think the next is going to be focused on enhancing the role of the loan officer with AI. In particular, we at Figure have a little bit of a different perspective, which is that AI is really meant to enhance the role of the loan officer. So we're rolling out a lot of products that are going to help the loan officer do better social media marketing, be more efficient with their calling, do a better job marketing to their existing base and knowing when to reach out. Because I think the future of AI and mortgage is this enhanced loan officer being able to do more and spend more time with customers and less around some of those back office processes we already talked about. And then where are we going in the future, the later, that is for me and how we're going to engage with our partners. We're going to be giving them AI tools to optimize the scenarios for their borrowers. And what I mean specifically by that is figuring out what's the right channel for the borrower. Could be direct, could be loan officer involved, no loan officer involved, could be communicating them with via email, text, right? Figuring out the context in which people want to be talked to, figuring out the products that are right for their situation, the pricing, the timing of when the outreach should be, all of these things kind of together that are optimizing the borrower situation from the perspective of the lender that are ultimately going to increase conversion. And I think that technology is not quite there, but that intelligence layer is going to be the future of AI and mortgage. And I think Figure is really excited to be at the forefront of that and bring that intelligence to our partners to help their loan officers and their customers really grow and drive conversion and ultimately thrive.
I think Figure's pretty well known for wanting to bring mortgage lending onto the blockchain.
Yes.
Why is the blockchain a good environment for the origination and the servicing of mortgages?
When I was at SoFi, at that time, each month we originated about 1.5 billion of assets across student loan, mortgage, personal loan. And we were constantly worried, and this is true for many non-banks, independent mortgage banks, these types of companies, how are we going to fund all these assets? And you're building all this process and checking with all these documentation and really struggling, frankly, to place all this product. And with the blockchain, we've standardized the capital markets across a common set of origination processes and procedures. We take all of the information of the loans, we put it up front on the blockchain, so as the loans move throughout the capital markets, the first buyer can do that diligence, and then the other buyers can rely on the same diligence because there is this truth versus trust, and you can see those attributes on the blockchain. We take 80% of the costs of quality control and third-party diligence out of the process. And so because of that, I mentioned that $12,000 versus $1,000, which we do, a huge part of that is the standardized approach where we help homogenize and add much more liquidity to these mortgages. And as a result, you have this very liquid and deep capital market because the more product that you have that's done the exact same way, the more buyers there are for that product, the more standardization. And so going back to that SoFi problem with what are we going to do with all these loans, we fix that by putting them all on a blockchain and having the buyers and the capital markets become very comfortable, and that's just added a lot more liquidity and ultimately lowered costs for both our partners and ultimately homeowners.
So you're running a very innovative fintech company and partnering with mortgage lenders to bring mortgage lending onto the blockchain. How are you thinking about the future? Like, take out your crystal ball. What trends do you see impacting the mortgage lending industry over the next 3 to 5 years?
The first is around the really steep changes in rates that we're seeing. That I think is going to be a trend that is going to put more and more pressure on mortgage companies to automate, because you're seeing these very short dips and spikes in rates, and it's not allowing people to staff up and staff down in the way that they used to. And so you're going to need more automation and reduced processes, because by the time you hire for the refi boom, it's gone.
It's too late.
Right? And so that's at least the market that we've been in. And I think given the news cycle and the way things work today and how fast everything moves, I see that as one. Another relates to the conversation we were having around AI, which is that there's a little bit of attention now on kind of replacing the loan officer and automating a mortgage completely. I don't think that's the future. I think the future is enabling that loan officer to do more with AI. I look at all of the other business models like wealth management, insurance brokerage, real estate, for example, meaning the realtors, and you really aren't seeing technology reduce those roles even prior to AI. In fact, in some ways, technology has enhanced the importance of these roles as things have become more and more automated. So I see a big future for loan officers engaging with AI, but not being replaced by it. And then the third, as I see, in particular, independent mortgage banks broadening their suite of products. I think historically, you have mortgage companies, they just do mortgage. I think with how things are changing in the industry and the advances in marketing with AI that's going to allow people access to more products, you're going to see independent mortgage banks in particular grow their product suite, take advantage of their relationships they have with consumers, and start to offer more. I think with Figure, as an example, we have a crypto-backed loan product, loans against Bitcoin, Ethereum, Solana. We're seeing a lot of our mortgage partners want to offer those as well and continuing to want to expand their product base. And I think that's a big part of the future.
Wow. Michael, what a fascinating conversation. Really enjoyed catching up with you today. Thank you so much.
Thank you.
Yeah.